All right. Happy Friday, everybody. We're live. Just in case some of you ever wonder, I know some of you watch this after the fact, and some people are like, "Wait, is this live or not?" Todd, Todd, do you remember what was that commercial? Is it live or Memorex? That kind of
Yeah,
stuck in my mind.
yep, that was the
Like,
VHR tape uh, manufacturers.
oh my gosh, it's like I think we've come a long way since then for sure.
VCR, VHS tapes.
Yeah,
Yes.
that's what it was. That's what it was. So a couple things. So I want to go over a couple of things. I'll introduce Todd Hassey in a minute. We're going to talk mortgages and some other things, some things to watch out for on the mortgage side. We're going to talk about that. But want to give everybody a little bit of an update as to what's going on in the marketplace. So we're in the mid 70s as far as properties that are active in the villages on MLS right now. You guys know that people have been following me for the last 18 months, ever since COVID hit. The basic trajectory of inventory. We've gone from mid 400s all the way down to like upper 40s as of like 3-4 months ago. Some people were thinking, oh my gosh, it's so hot that we're going to see a market crash. And that's not what we've seen, right? Like we've seen a little bit of a plateau, a little bit of a leveling off as far as sales, a little bit less volume in sales. But certainly as far as inventory goes, it's climbed up a bit, but it hasn't gone straight through the roof. It's not like we're seeing inventory levels reach an incredible amount where there's so much to choose from. In fact, we are seeing some people struggle, and we've talked about this in past weeks, where some people are struggling with the lower end of the marketplace, where people like now they're being outpriced in the marketplace. We've seen a little bit of that for sure, unfortunately. We've also talked about appreciation in certain levels. The basic levels of the villas is about 25 to 30% since last year. And then, of course, the upper end, the places that do have a view, whether it doesn't matter what square they're near, whether Spanish Springs, Brentwood, or Sumter Landing, if they've got a view, if they're on the golf course, if they've, overlooking what we call a lake, but it's really a retention pond. Those things are, the values of those properties have gone the roof, straight through the roof. I've gotten a couple of calls this week from several of you, and I appreciate that. The folks that really need help with looking for a property. So you can connect with me there, 352-572-3796, 352-572-3796. But I want to introduce Todd Hassey. He's driving, but he's a man that can handle stuff. He can handle all kinds of stuff. Todd Hassey is our mortgage specialist. So obviously, I encourage people, if you have mortgage questions, I love starting stuff backwards, by the way, and I think it's better for my mind. So Todd, how do people find you, by the way, if they have a mortgage question? What's your phone number?
727-439-7867. Again, that's 727-439-7867.
Thank you for that. So Todd, tell us about, first of all, give us a little bit of a little history over the last, from beginning of this year, 2021, where mortgage interest rates were, what's happened to them, where are we now?
Well, since the beginning of this year, they've started to creep up just a little bit. It's still holding. I mean, I can't. That's really just keeping it real basic. That's really it. I do expect it going forward to start to run away from us, not super fast by any means, but it's probably 1/8 to 1/4% higher than it was at the very beginning of the year. So to me, that's not a lot.
So it's a little bit higher. And by the way, what does that do to affordability?
Well, if Fannie Mae and Freddie Mac, being the rule setters on a conventional loan, say that you can't exceed 46% debt ratios, and you're already at 46, the 1/8 would totally impact you, and you would not qualify. So that 1/8 could be a deal breaker for some people.
So what if, and look, I think most of the people that are watching, that's not an issue. Like qualification is not going to be an issue. I mean, some people fall into that. It's not necessarily a qualifying issue, but a lot of people they've got the cash and they decide, you know what, money is cheap. right? Like money is cheap,
Yeah,
whether it's a 15-year or
very.
a 30-year, right? Like what's
Yep.
the lowest? And by the way, the asterisk, the disclaimer is look, it depends on everybody's situation's a little bit different. I'm basically helping Todd out here in a little bit. But we do get that question, what are interest rates? What's the lowest you've seen over the last 30 days?
Last 30 days, I'd say right at 1.99 on a 15-year fixed.
Yeah.
It's still there.
Yeah, crazy. How about
I
on
can't
a 30?
on a 30. I'm going to say it's like 2.875.
Yeah, roughly
Yeah.
right around that. Yeah, and that's the lowest. And by the way, everybody's case is going to be a little bit different.
Yeah, it's also a difference between conventional and government insured being FHA and VA.
Right.
Government insured, I'm saying 2.5. So
Okay.
let me just clarify that.
Got it. So you said something that was interesting. You used the words runaway, like it's going to run away. What's your? I know you don't have a crystal ball. What are you thinking about? Where you think it's going to go?
Well, I like referring back to history, being, Vietnam. Unemployment was at an all-time high. We were, as the market started to recover, we saw mortgage interest rates go upwards to 17%. So that being said, that's what I mean by running away. And it's going to be over the course of years that happens. But it's right now, it's not going to happen to us for a couple of years. I see maybe 0.25% or 0.5% as we go through the next six months to a year. That's my prediction. But history repeating itself is what I'm trying to communicate. Sorry, I'm a little distracted at just the second right now. So
no, it's all right. And actually, I'm going to share something with everybody that's kind of interesting. I saw this earlier on this afternoon, and the affordability index has obviously, we're going down in affordability. Now, remember, I covered this a couple of weeks ago, where we're talking about affordability. And what's interesting is that, yes, it's, homes are less affordable now than what they were, back in January. But certainly when we compare it, to the times like in the early 2000s, it's still much more affordable, mostly because of interest rate, right? Like that's certainly a thing. Now, the other thing I want to show you is the which is even more important and probably a little bit more pertinent to what Todd's talking about. Let me pull up. I want to pull up a different screen for you to show you. Okay, this is what's going on. So let's see. I want to pull up this right here. If you guys can see that. I got too many screens open. It's the end of the day, and I hate when that happens. I've got 25 screens open, but I'm going to share a particular screen with you that's going to talk about this. Let's see. So right here, let's look at the mortgage rates, and basically this is what Todd's talking about. He didn't know I had this, so I'm
looking.
Right. So we're looking at some interesting numbers here, right? So we're looking at. Let me see if I can zoom this in a little bit. I don't know if that helps a little bit. You have to have microscopic vision, but I can tell you what it basically says. Looking at the Freddie Mac, looking at these dates here, looking at November. Let's see, 9.2. We got 8.5. Let's see, 30-year rate 2.87, and looking at way back when. Looking at some time ago, looking at 5%, right? So obviously this has been our journey on interest rates, and it's going to vary a little bit. And this is on a 30-year fixed rate, and yes, January we saw lower rates at some point, but this has been the journey, and now it went up and then came down a little bit as well. And it's not the lowest it's ever been, but it's pretty darn low. And I think that's really talking about why things are, maybe they're not as affordable as what they were, several years ago, when interest rates were maybe a little bit higher, but the prices were a lot less. And now we're seeing interest rates be really, really low, record level lows. but the prices have gone up. So it's kind of a balance, a little happy balance, isn't it? So what are you seeing, Todd? At the moment, what are you seeing on issues that people are facing at the moment? What are some of the things that people are running into?
Well, it's values frequently. I mean, as this market's running away from us because the supply and demand is pushing values up, finding comparables to justify that sale price is sometimes a challenge. So oftentimes they renegotiate when the appraisal comes in short. That's between buyer and seller, and those that don't renegotiate, they just bring the cash to close difference because they agreed to the price. So that's one of the biggest challenges in this market right now.
So
Outside, go ahead.
What can someone, let's talk about this. I think what's really important is, okay, what can someone, and by the way, if you guys have questions or leave some comments in the chat section, that'd be great. We've got some people that are watching live right now. And down the road, by the way, later on, do that. We'll talk about how to connect with Todd as well, if you have some mortgage questions. What can someone do to make the process as easy as possible, A to Z? Let's talk about that.
Preparation is the whole key. The better prepared in terms of evidence, the assets, the income, and the collateral being, the appraised value, the better prepared with all of those documents to support all of that, the smoother the transition, and soup to nuts shouldn't be more than 2 weeks. And if we get those, and I'm getting a lot of these that do not require the appraisal, believe it or not, I know we just kind of contradicts the value issue that we discussed. However, if I'm running something through the automated engine, which is an electronic churn of credit, income, the collateral being the address, and I'm getting an appraisal waiver, then all I'm doing is having the customer provide the assets for cash to close, the income documentation, and those things are done. I've closed them in as little as a week and a half. So, and that's using the bank's money, not being a cash borrower or a cash buyer, not borrower. Sorry.
Right. Makes sense. Makes sense. So obviously, getting pre-qualified. Let's talk about documents. What are some of the documents that you recommend people have in order to have their ducks in a row?
Basically, it's everything for 2-year history to show residence, employment, income, and the assets, for cash to close. And outside of that, it's any other documents for other properties that you would need to provide, such as your mortgage payment. If there is one, then you would provide your most recent mortgage statement, the insurance declaration page, the tax bill, so we can evidence that carrying cost of that other property. So that when we start adding other properties into the scenario, it gets a little paper chasing nightmarish. But 2-year history. So we're looking just to have the last 2 years of tax returns, last 30 days of paycheck stubs, the identification documentation. That's pretty much it.
Okay, good. So we're with Todd Hassey, Simple Home Lending. And Todd, how do we find you? What's your number?
727-439-7867. And I live what I do, so if I don't call you back in 10 minutes, it's just because I'm with a customer.
And by the way, I want to talk about that because we ran into an incident. Obviously, being the broker here, we deal with a lot of situations. We've closed thousands of properties this year, and invariably what happens is I get agents that will call me with a situation, and we try to solve the situation. And one of the situations we're dealing with was a situation where a mortgage company, obviously not Todd's firm, it wasn't with Todd, it was another company, it was actually out of the market from the Northeast, and they didn't have a lot of knowledge about this particular market, which is always really, I know some of you that are out of state, you have your favorite lender and your bank, and I don't think that's a smart move, and I can't steer you in that direction. I can't force you to do any of that because that's illegal. But for people that don't know the market, it makes it challenging when you're trying to do something here for sure. That's one. But number two, I noticed that the biggest challenge that we had in this particular case was the buyer was not getting a lot of communication. Right, there was a particular situation they were going through that was a real challenge. There was no communication between buyer and lender. Todd, talk about your communication process.
Well, as I stated before, preparation is the whole key to have a smooth transaction, and that means getting everything up front. Communication is just as important. So it's important to understand when we enter a contract, what the next step is after that. That means the home inspection, and just like buying a car, it's lifting the hood, kicking the tires, making sure the collateral is what it is. And then at that point, the renegotiation if we find issues with that inspection, and then the next step. So the life of the process, and communicating those steps from one to the next is probably the most important piece to make everything come together. Because if there's no communication, there is no transparency, and that leaves all of us on the outside who are buying or selling going, what's going on? What's going on? And there's not a bigger stress than moving, short of death in the family anyway.
It's very stressful. That's one of those things that I talk to my agents all the time about that, having empathy for the other side and understand that
Right.
it is a tough situation. And I think it's great for agents and realtors to buy a house or sell a house just to go through the experience, because it's not easy, and communication through the whole process, because we understand how the process goes, because we're doing it, we do it a constant. We forget that the person on the other side, the consumer, doesn't go through it all the time, so they don't know what to expect. They don't understand that someone might be emotional on the other side, and they get emotional because the other side's getting emotional, or they don't know that things take this particular amount of time to get done, and that the mortgage company is going to ask for certain documents because they are borrowing money, right? It's not a gift, right?
Right.
And there will be certain things that you have to follow. And I think having that communication and helping the buyers, helping the sellers understand this is what's going on, is ultimately not that it's going to be gumdrops and marshmallows and whatever that Barney dinosaur song was, but definitely it'll help for sure.
Yeah, it can be a nightmarish experience if you're not looking ahead of the curve and communicating the steps of what's involved as we go. So, and I've been doing this a really long time, so I kind of take pride in that step, because on the other end of it, these are the things that I would want to know. So I know what's expected next, and I'm very much aware, and the time frame of those steps. So that's the transparency of communication to me.
100%. No, makes sense. Makes sense. Todd, I appreciate it, brother.
Thank you very much. And on the next one, I'll make sure we've got 100% attention here, because I'm a little distracted, and I do apologize.
Okay, we don't want you bumping into anything.
Oh, no, I'm good. This is my mobile office. It's just family is what I'm trying to manage.
You're used to it.
Yeah. Yeah. All right. Thanks very much for letting me be a part today.
You got it, Todd. Take care.
You too.